Hi, welcome back. Today I'm going to share with you about the fear gauge. Oh my gosh, what is the fear gauge? As well as what we call the simple moving average 200-day line. Now we're going to combine these two concepts and kind of give us an indication where is the market direction. Now, this is probably the best time in the entire history of the market to learn about the fear gauge. Because why? We are just seeing a complete capitulation of the market, blood on the streets, and how the blood on the streets rebounded with the greatest rebound, and what is the direction moving forward from here, all right? So first thing first, let me change over the slides and let's take a look at the Cboe Volatility Index, ticker symbol VIX, all right? Now what is really important when we look at this index is to kind of craft out the time frame. And the time frame is, as you can see below right here, is bottom left 2020 and the bottom right 2022. All right, so I'm going to set this up really clear in front of everybody. And from here, I'm going to start my navigation. How this works is this. First off, there are two very important critical points, which is at 30, right over there you can see, and then between 20 and 30, all right? So this is, I will call it the red box. And I'm going to do it again so that you know exactly where I'm looking at. I'm going to start off from here. Let me just move away from the box right over here. Here we go. Right at 30, and then right up here to 25, all right? This is the fear gauge. Now, this box is really important to us because it gives us kind of an indication when the market is extremely fearful. Now, case in point, last night it was trading right up here, 35 hitting to 38. This was on a one day itself, a big spike right over here, all right? And it was extreme fear. Everybody was just selling off. The word for that is capitulation, and kind of freak out many of the ordinary traders, right? So many of them liquidated their losses, which is what we don't preach about. We believe that we should always invest and never sell at a loss, all right? So take a look at this, and then it didn't form a full candle. It was just a hair, H-A-I-R. You don't see a full body candle, all right? So it pops up, breaks above 35, and then pops back down, back to the 30 and 25 range, all right? So this is the part that we really need to understand. Now from here, then it becomes very interesting. I'm going to put out the three indices in front of us. And this is NASDAQ, whereby so many of the tech stocks got hammered. And then we got a plot like the 200-day moving average, simple moving average line together with the 50-day simple moving average line, all right? So the green is the 200-day and the red is the 50-day. Now this is the part right here where everyone is commenting about the fact that, oh my gosh, the NASDAQ has broken below the 200-day simple moving average line. This is the real scary part, all right? And the moment it broke through this very important support line, boom, straight away you see a free fall. And this free fall translated into what? Into exactly what we see right over here. This is the definition of the fear gauge. And you can see there's a correlation. Fear gauge kind of hit like 38, boom, there's a free fall on the NASDAQ 100 index, all right? Now this is really important, but you know, as I kind of navigate around here, I also want to bring out the three major indices, right? So the second one I'm going to bring out is the DJI, Dow Jones 30 Index. And again, we can see right over here the Dow Jones 30 Index, there was a breakthrough the support of the 200-day simple moving average line and then caused a free fall. But again, look at this free fall. It's just a hair, H-A-I-R. There is no like full body candle. It's not red. It's in fact turned into green. So when the body is right up there at the top, guess what? This is a kind of a symbol of an arrow firing up to the sky, all right? So this is really gorgeous. And of course, we will have the S&P 500 index. Right over here, let me click on it. Here we go. Right there, again, a break, step one of the 200-day simple moving average line, and then it goes on the free fall with a hair, H-A-I-R, and then it forms the green candle body that looks exactly like an arrow shooting right up there, all right? So this is a quick introduction on the fear gauge. And the fear gauge kind of gives us a prelude into what the market is thinking about. I think we have kind of hit the rock bottom at this moment, the 30 to 25. And today, I believe that if the market kind of open up right here within the box and start to move below 25 out of the box, we're going to have a super rebound right here tonight, all right? Now, I'm going to just take through one last step right here. We're going to look at our mama stocks. And here we go. Let's take a look at Microsoft. And again, this is the moment in time all of us really got to tune in on the 200-day simple moving average line, all right? So here we go. Break. There's a hair, and then the body form at the top. And this is probably the best time you can ever own Microsoft, which is severely tested on the fear gauge. You're not going to get opportunities like this again. Why? Again, from here, we kind of look at this 38. How many times in history has it ever broken the 38 line, right? 35 to, or what we call the 35, 38 line, right? And I'm going to kind of manipulate this little circle right here. Move to the left. The previous time was in early 2021. And the previous time, that was in the pandemic. Back in the pandemic days, kind of gone crazy, so much fear in the street. But the test is the 38. So how many times you hit 38 on the VIX? Not that many times, right? So once it hit, it goes back down, and the market is waiting for a rebound. Second one, we're going to look at Apple, Mama, and here we go. Now, everybody right now kind of waiting for Apple to be the barometer. They are kind of cursing Apple to touch the 200-day simple moving average line, which I don't think you'll hit that, all right? So, because why? The hair has been formed. The body is at the top of the hair. The arrow is shooting up. So, the chances of Apple touching 147, I don't think is a high chance event, all right? And let's go on to the next one. Mama, we're going to look at Facebook Meta, and I mean, Facebook is completely messed up on the 200-day. You can see right over here, holy moly, it kind of really messed up already, and I believe those who bought it at $300, that represents a really, really fair price. And so many of them, the money managers, the fund managers on Wall Street, took the opportunity to go and buy Facebook last night, all right? So we have Mama, and the last one is Google, Alphabet, all right? Here we go. And Google kind of also broke below the 200-day simple moving average line, and they don't really have a strong hair. So I think kind of floating around 2005, if you can get it at 2005, that is a really, really great price. The last candidate is Amazon. Here we go. Amazon completely out of whack right here. So, you know, right now it represents an extreme value price. That's why the market is all commenting that this is the moment in time to go for extreme value stocks. And there you go, 2,800 represents the real nice price for Amazon. So I hope today's introduction will give you a deeper insight on how to use the fear gauge, and in relations, look at the 3 indices. In relation, look at the 4 or 5 mama stocks. Thereby, they set as the bellwether stocks, and they represent the barometer of Wall Street. I hope you enjoyed today's session, and please go below and join our community, our Spiking Wealth community, where you get to see even more exciting postings on a daily basis, and I welcome you on board. Thank you, and God bless.